Hello, I'm Bernard Hickey from interest.co.nz and welcome to our morning briefing. Slightly more than 90 at 9 this morning because there's been more turmoil on global financial markets overnight. The world's central banks, in an unprecedented move, have injected $180 billion into the world's money markets, essentially to restart a frozen system. Banks have essentially stopped lending to each other. Fear has become panic. There are fears that Morgan Stanley may have to sell itself cheaply to survive. It apparently is in talks with the China's sovereign wealth fund to sell 49% of itself. There are fears that money market funds with $3.6 trillion will suffer massive outflows as investors in the United States pull their money out immediately. They can pull them out without any notice. The oldest money market fund, Reserve Primary, had to suspend redemptions after 60% of its money was pulled out in 2 days. It had $63 billion. And only last night, Bank of New York Mellon Corp said its $22 billion institutional reserves fund fell below that buck level. It is the world's largest custody bank. It administers $23 trillion worth of assets. Meanwhile, Britain has banned short selling of stocks, and the New York governor, Mario Cuomo, he will investigate short selling on the market. Also in Congress, Charles Schumer, the head of the Finance Committee, he wants to build a reconstruction finance corp to pump capital into banks. And there's also talk of a resolution trust corp body to essentially buy bad assets and manage them. These are both Depression era institutions that haven't been used for a long time. This momentarily gave some confidence to the market. The Dow ended up 410 points or 3.9%. We'll see what happens this weekend. For the last 3 weekends running, the US Federal Reserve and Treasury have been desperately trying to stop banks from failing.